Hi, I'm Christine Pronek. I'm a partner in the Trust and Estate Group with O'Connor Davies. I'm in the Cranford, New Jersey office, and I'm going to be talking today about 3 key concepts to keep in mind when doing estate planning for New Jersey residents. The first one being New Jersey's incredibly low exemption. We have an exemption of $675,000, which is the lowest of any of the states. So when you hear people talking about, oh, I don't have to worry about my estate planning anymore, such a high exemption, the federal exemption is $5,340,000, but New Jersey still has a low $675,000. With some life insurance and a house, somebody can get to $675,000 very quickly. So it's important to keep in mind, for New Jersey residents, estate planning is still very important. There's tax to be avoided, and it can come into play at a very low level, being the $675,000. Another key concept would be income tax considerations. You want to keep in mind when you're doing planning for your clients that now we have a very high income tax rate environment. Federally, the highest income tax rate is 39.6%. With the Medicare surtax, there's another 3.8%, and then you would add to that New Jersey income tax considerations. So when you're doing planning for the New Jersey resident, granted, you're going to think about that $675,000 low exemption, but keep in mind that the highest New Jersey estate tax rate is only 16%. And that comes into play at a gross estate of around $10 million. So if there's going to be gifting, there won't be a step up in basis on the assets that are gifted. Those transfers, when those transfers are made, that needs to be taken into consideration. So again, income tax considerations, thinking about what you've just done when you make a transfer during a lifetime versus the estate tax you saved on the New Jersey estate tax return at that person's passing. It's key to keep both of those things in mind, income taxes and estate taxes. And the last thing to keep in mind is that New Jersey has an inheritance tax. A lot of people tend to forget that. They're focused on estate tax and forgetting that we also have an inheritance tax. The estate tax is based on the value of the gross assets of an estate. The inheritance tax looks to who's receiving those assets. So both of those things have to be looked at. If you have a client that has an estate that's under $675,000, doesn't automatically mean there's nothing to be done in New Jersey. You have to look to see who's going to receive those assets, because there could be an inheritance tax concern. And to keep in mind with that, the greater of the 2 taxes would be paid. So inasmuch as there are 2 different taxes, you would figure out both of them. If there's an estate tax liability, that gets determined. If there's an inheritance tax liability, that gets determined. The higher of the 2 taxes is what will be paid to the state of New Jersey. So just 3 things to keep in mind when planning for New Jersey residents.